Hey, good morning, all. This is Paul Asmar from CamelbackTrading.org. It's a Sunday morning. I've been going over my charts. I like when it's nice and quiet and peaceful. Just look over some things. And hopefully, I was looking at daily chart, 30-minute chart. Just want to go over a couple things that hopefully can benefit traders. So we're looking at the daily chart of the SPY. I'm going to call this basically the birth of a swing trade. And it goes to show you how even FOMO plays out, not just on the intraday, but on longer time frames and stuff, and how maybe this could calm it a little bit. Use a lot of terms that you hear repetitively by me, but I think it's important. And so for this one, we talk about markets that don't go bull bear. And the reason I'm using this is because as we were getting up to this level, people were getting very antsy saying, we should short, this market's a short. And let's go over what I think the risk reward would be on a trade like that, and how it could have played out on a swing trade. So the market, after basically coming in mid-July and not taking out a weekly low, came into balance on a gap. And then from that point on, basically from July 15th up to August 16th, so a full month, perfect, beautiful month. The market went bull, balance, back to bull, balance, bull, balance, and rolled over finally bear. Now, a lot of people like the higher it went. This was a huge run, and it was. We went from 371 up to 432. It's a $61 move. So granted, but again, $30 up, people were saying this is too much of a move, right? We got into this gap. That's all they want to do. $40 up. Oh, that's all they want to do. We're into this previous 9 day balance. Well, think about that. If you're attempting to short here, okay, maybe eventually you'll be right. But again, you're never going to outlast the market. Plus, when we got up to this level, this was the first time in all of 2022, all three time frames were up, monthly, weekly, and daily. So right there, that's telling you something's changing. Now, is this a very visual risk-reward short? It is. It is for two reasons. Number one, you're right up at the 200. Number two, you're right at May's high. So before we go on, let's just go back to the monthly real quick. The reason May's high was so important to me, because remember, for all of 2022, okay, we were December. The market was bull on the monthly in December. January didn't go bull bear. January put the market into balance. February took the market to bear. And then we had February, March, April, balance after that. And then May came out bear. So we went, right, bull, balance, bear, balance, bear, balance. So why was May's high so important to me is because that's the second leg of going bear in 2022. Okay? And look at the distance it got away from those previous 3 months lows. Then June didn't get much, and July got nothing. So that's why any acceptance above May's high, to me, put 450, 460 in the crosshairs that the buyers can get. Okay, now let's go back to the daily. So it's a decent risk-reward trade. But what was the market attempting to do this whole time? We were going up. So even though you can take a short and you're saying, okay, well, I know my out. My out is the 200. My out is if we start getting acceptance above May. And that's certainly true. But here's the problem with that, especially if you're looking on a daily basis, I have no problem with that. But if you're looking for a swing trade where you think the market's getting extended, the only problem with that is you could have gone home short this day. And again, this is all, all of this afterwards is after the fact. But we could have gone home short on August 16th. But think about what was transpiring the whole way up. Look at this gap. Look at this gap. These are pretty big gaps. What's to say you don't gap up another $4 or $5? So instead of trying to pick a top, yes, obviously in hindsight, this is a beautiful risk-reward short. But now let's go to the birth of a swing trade. So finally the market went from bull to balance when we went down here on this day and more balance on an inside day. Now the next day we gap lower. So now, basically for the first time since mid-July, the daily went down. You could have shorted, and again, you're never going to pick tops, never going to pick bottoms, so the high of that day is 425.26. Just round everything out. You take a short at 425 that day. You're out is that gap fill. Okay? 425. Nothing told you to get out of that short. Again, I'm not talking about day trading. I'm talking about a swing trade now. You're comfortable. You've been waiting for the market to roll over. Now the next day you have a tremendous gap. Now there's one of two things you can do. You're short at 425. That next day's low is 412. You already have $13 into the trade. But okay, this really just started, two big gaps to leg down. I don't expect the market to, the markets don't go bare bull. So now you say, okay, I'm going to stay short. That's fine. Now the next day, you do make a lower low, but you don't get much distance. All right, we'll see if this is just a rest period. Then the day after that, you take that day's low out again, but now after two gaps down, the next 2 days, you get no distance at all. Now you can do one of two things. You didn't get much below this day's low. 412.40, we got down to 411.39. It's only $1 more. Is the trend getting tired? You're short at 425. You got down to 411. Your price target could be a certain amount, $10, $15, the bottom of this balance low. Again, that's something you have to determine. But even if you don't take it off now because you're like, well, the market now has gone bear, we're still bear. Even though these 2 days didn't get distance, they did take out previous lows, so you're still bear. So you say, I'm not going to get out of this trade. Now, the odds of a big gap up after this are not nearly as high as the odds of a possible gap above this high because the market was going up here, right? Up, balance, up, balance. This had changed. So the odds of that big gap aren't as good. So now on this day, you do take out this day's high. This day's high is 415.11. This day opened at 415.24. You take it out. Now you can say, okay, the trade is over for me. Even though there's a big gap up here still. I'm short at 425. We take out 415.11. It comes back. Actually, went down below 415 that day, but it did take out that day's high. You put it to bed at 415. Okay? That's a $10 trade on a swing trade in a matter of 5 days. Now, you could have made a little more money out of it if you took it off at 411 or 412. However, at this point, you're still like, well, maybe we're going to get a big gap lower. So I'm going to stay with it because the trend is still my way. Your risk, when you shorted this at 425, is the gap fill. 425.50. Even 426. You want to, if it got back into that inside day, okay, let's see. Right? Because when you come out of an inside day, you go with it and monitor it for continuation or lack of. Well, it's certainly at continuation. So you had $1 risk. And even if you waited to take out this day's high and bought it back at 415, you made 10. That is a 10-to-1 trade. That's a birth of a swing trade when the market changed. Could you have sold it higher on this day? Of course you can. But do you have the MGI, the market generated information that this day is giving you, that this day is giving you? No. It's easy in hindsight to say, oh my goodness, we got no acceptance above May's high. We hit our head on the 200. Absolutely. That's true, but there's no guarantee. Plus, like I said, we could have closed that day and the next day gapped above here by $5. This is a lot more powerful odds in your favor on your short. So I hope that helps. And one other thing. Here's Friday's day. I saw a lot of people on Twitter. Even though the market was down, I made money on the long side. Let's get something straight. Here's A period inside of the price probe. Here's B period when Powell's statement came out. Just algos all over the place. And then finally late in B period started getting its direction. This market told you the short is the only play for that day. Every short got paid that day. Now, some people said they made money on longs. That's, God bless them. But I can tell you what, Anybody who tried to long this market, we always talk about odds and percentages. I'd say 90% of people who bought this day got destroyed. Only one time in this time frame, we had a $15 range basically, 420 to 405. $15 range. We took out this time frame's high by 23 cents. We talk about the lion waiting in the grass, okay? I was waiting, if this thing had gotten up anyway near that little small single print fill, and then we had the two big ones above us, to lay into this thing around the 412 level. If I was still trading options, that would have been 100 or 200 put play. Since I'm trading futures, if it had gotten up there, I would have shorted 10 of the mini. Never got there. Never got my opportunity. But then I started, once we rolled over again, I made money shorting it on the way down. This is the market doing the work for you. Not one short was in trouble this day after B period. Now that was still touch and go when they kept going back and forth inside of A. You did not know just yet. But come C period or late B period, this market told you there's only one play only is short. Let the market and the market generated information make your life easier for you. Believe me, I've attempted to buy this market in the past. It generally doesn't work. Anyway, I was looking at these charts. I love doing that when it's quiet on a Sunday morning, just figuring some things out. I hope it does help you seeing what Friday looked like, and certainly what I just showed you on the daily. Now, what do we expect for tomorrow? Again, I'm not sure, right? We had a huge trend day down. We have the end of the month on Wednesday. We have the job number on Friday. I did say at one point yesterday, on Friday, not when we were down here, but we were at 410. I said, now it's really only a 1-for-1 trade. I said the odds of going to 420 rather than going to 400 first, I think, are a lot less. I said I think we certainly go test around the 4,000 level. And I still believe that. Now, obviously, we came in more after I said that. Will we get a gap low on Monday? We'll see. If we get a gap low on Monday against the 50-day moving average, that might be a first time, nice long play the first time against that. But the odds of taking back all of Friday in one shot are not going to be very good. So keep that in mind. Anyway, hope this little video helps. Enjoy the rest of your weekend. And we'll speak prior to the opening tomorrow.